Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we're taking a closer look at an important development that has caught the attention of currency watchers and economic observers alike. According to a recent statement from an economic expert, the arrival of a new shipment of US dollars into Iraq's financial system could contribute to an improvement in the value of the Iraqi dinar in the near term, potentially as soon as next week. While this may sound like a straightforward development, there are several underlying dynamics at play that are worth unpacking to fully understand what this means for the Iraqi economy and for those following the IQD closely. To begin with, it's important to understand the role that dollar liquidity plays in Iraq's financial system. Iraq operates within a framework where the US dollar holds significant influence, particularly in trade, imports, and even domestic transactions. The central bank relies heavily on dollar reserves to stabilize the exchange rate of the dinar and to meet demand from importers and businesses that require foreign currency for international transactions. When there is a shortage of dollars in the market, it often leads to upward pressure on the exchange rate in the parallel or black market, meaning the dinar weakens relative to the dollar. Now, the arrival of a new shipment of dollars essentially increases the supply of foreign currency within the domestic banking system. This is a critical factor because exchange rates are heavily influenced by supply and demand dynamics. When the supply of dollars increases, it can ease pressure on the market, reduce speculation, and narrow the gap between the official exchange rate and the parallel market rate. In simpler terms, more dollars in circulation can help stabilize the dinar and potentially strengthen its position, at least in the short term. However, it's essential to approach this development with a balanced perspective. While increased dollar liquidity can have a positive impact, it does not automatically translate into a long-term appreciation of the Iraqi dinar. The currency's value is influenced by a wide range of factors, including monetary policy, fiscal discipline, oil revenues, political stability, and structural economic reforms. A single shipment of dollars, even if substantial, is more of a short-term intervention rather than a fundamental shift in economic conditions. In the short term, the expert's prediction of an improved exchange rate next week is plausible within the context of increased liquidity. Markets often react quickly to changes in supply, and if banks and exchange houses receive sufficient dollar inflows, we could see a temporary strengthening of the dinar in the parallel market. This might be reflected in a narrowing spread between official and unofficial exchange rates, which has been a persistent issue in recent months. For everyday Iraqis and businesses, such a development could bring some immediate relief. A stronger dinar or a more stable exchange rate can reduce the cost of imported goods, which is particularly important in a country that relies heavily on imports for consumer products and industrial inputs. Lower import costs can, in turn, help ease inflationary pressures, benefiting households and improving purchasing power. That said, it's important to recognize that these effects are often temporary unless supported by consistent policy measures. If dollar inflows are not sustained, or if underlying issues such as inefficient banking systems, regulatory challenges, or external economic pressures persist, the market could quickly revert to previous conditions. This is why analysts often emphasize the importance of structural reforms alongside liquidity injections. Looking at the broader picture, Iraq's economy remains heavily dependent on oil revenues, which are denominated in US dollars. This creates a natural inflow of dollars into the country, but it also exposes the economy to fluctuations in global oil prices. When oil prices are high, dollar inflows increase, providing the central bank with more resources to support the dinar. Conversely, when oil prices decline, dollar inflows shrink, putting pressure on the currency. In this context, the arrival of a new shipment of dollars can be seen as part of the central bank's ongoing efforts to manage liquidity and maintain stability. It may also reflect coordination with international partners or adjustments in monetary policy aimed at addressing short-term imbalances. However, for the dinar to experience sustained strengthening, broader economic diversification and reforms are necessary. Another factor to consider is market sentiment. Currency markets are not driven solely by fundamentals. Perceptions and expectations also play a significant role. News of increased dollar availability can boost confidence among traders and investors, leading to reduced speculation against the dinar. This psychological effect can amplify the impact of the actual liquidity increase, at least temporarily. At the same time, authorities must ensure that the distribution of these dollars is efficient and transparent. If access to foreign currency remains uneven, or if certain market participants face restrictions, it could limit the effectiveness of the intervention. Ensuring that banks, businesses, and exchange houses can access dollars through official channels is key to stabilizing the market and reducing reliance on the parallel market. From a policy standpoint, this development highlights the ongoing challenges faced by the central bank in balancing stability with reform. Managing exchange rates in a dollar-dependent economy requires careful coordination, and while liquidity injections can address immediate pressures, they are not a substitute for long-term solutions. Efforts to modernize the banking sector, improve financial transparency, and strengthen regulatory frameworks will be crucial in the months and years ahead. For those closely following the Iraqi dinar, it's important to interpret this news within the appropriate context. The predicted improvement in the exchange rate next week should be viewed as a potential short-term adjustment rather than a definitive trend. Currency movements can be influenced by a wide range of variables, and short-term gains do not necessarily indicate a long-term trajectory. In the longer term, the outlook for the Iraqi dinar will depend on several key factors. Continued stability in oil revenues will remain a cornerstone, as it provides the primary source of foreign currency. At the same time, efforts to diversify the economy, attract foreign investment, and reduce reliance on imports will play a critical role in strengthening the dinar's fundamentals. Additionally, political stability and effective governance are essential components of economic confidence. Investors and market participants closely monitor developments in these areas, and any signs of instability can quickly impact currency markets. Conversely, positive developments in governance and reform can ta'ziz confidence and support the dinar over time. It's also worth noting that global economic conditions can influence Iraq's currency dynamics. Changes in U.S. monetary policy, fluctuations in global demand, and geopolitical developments can all have ripple effects on emerging market currencies, including the Iraqi dinar. This interconnectedness means that local developments must be viewed within a broader global context. Returning to the immediate news, the arrival of a new shipment of dollars is undoubtedly a positive signal in terms of liquidity management. It demonstrates that authorities are actively working to address market imbalances and support the exchange rate. However, the extent and duration of its impact will depend on how it is integrated into the broader policy framework. For businesses operating in Iraq, improved dollar availability can facilitate smoother transaction and reduce uncertainty. Importers, in particular, stand to benefit from more predictable access to foreign currency, which can improve planning and reduce costs. This, in turn, can have a positive impact on economic activity and growth. For individuals, a more stable exchange rate can enhance confidence in the financial system and reduce the incentive to hold dollars as a hedge against currency volatility. This shift in behavior, if sustained, can further support the dinar by increasing demand for the local currency. However, it's crucial to avoid overinterpreting short-term developments. Currency markets are inherently volatile, and while this news provides a positive indication, it does not eliminate the underlying challenges. facing the Iraqi economy. Responsible analysis requires acknowledging both the opportunities and the limitations of such developments. As we look ahead, it will be important to monitor how the market responds in the coming days and weeks. Key indicators to watch include the spread between official and parallel exchange rates, levels of dollar demand, and any additional policy measures announced by the central bank. These factors will provide a clearer picture of whether the predicted improvement materializes and how sustainable it might be. In conclusion, the arrival of a new shipment of dollars represents a meaningful step in addressing short-term liquidity needs and supporting the Iraqi dinar. It has the potential to improve the exchange rate in the near term, as suggested by the economic expert. However, its impact should be viewed within the broader context of Iraq's economic structure and ongoing reform efforts. For followers of the Iraqi dinar, this development serves as a reminder of the complex interplay between liquidity, policy, and market dynamics. While short-term improvements are possible, long-term stability and strength will depend on sustained reforms, economic diversification, and effective governance. Thank you for watching Iraqi Dinar News, where we focus on delivering responsible, factual, and balanced updates. If you found this analysis helpful, make sure to subscribe and stay informed with future updates. Please remember that this content is for informational purposes only and should not be considered financial advice.